John Mondillo is the head of North American Fixed Income for Aberdeen. Aberdeen is a global investment company. They help their clients plan, save, and invest for the future. And with me is John Mondillo. Great to have you here.
Jane, pleasure to be here. Thank you.
So let's just lay the groundwork. Tell me about Aberdeen.
Yeah, so Aberdeen is a global asset manager. We manage about $500 billion in assets globally for both large and small. So discretionary and non-discretionary mandates on behalf of both institutional clients, as well as mom and pops, retail investors.
Okay. And then what are you telling clients right now?
Yeah, so I think it's important for investors to realize that, while we might be getting to the latter stages of this Fed hike cycle, and the economy looks rather resilient, that it's important to be positioning their portfolios for what's to come next, right? So maybe 6 months ago, it was looking like it was strong indications of a recessionary environment. As that continues to get kicked forward, it's about maintaining those investments within existing portfolios, and then again, repositioning around the margins for when we do see that economy start to slow. Our expectations as we get into 2024, certainly the first half of 2024.
Okay, so you do think we'll see a slowdown at some point here?
Yeah, absolutely. I think, we've spent the better part of the last 12 months talking with investors about what their asset allocations look like, the traditional 60-40 split, should it be flipped, right? And I think that's still a conversation that's being had with investors, just given how attractive fixed income looks at the moment. And again, I think the opportunities within fixed income as we get into next year, as we get into corporate earnings that are maybe slowing a bit, and our expectations that fixed income outperforms in that environment.
How did you navigate this whole, say, the last 3 years? Pandemic, supply chain issues, interest rate increases, inflation. I mean, we've had a lot thrown at us over the past 3 years.
Yeah. I mean, I think from a macro level and as a top-down manager, it's probably been very difficult. I think when you look at Aberdeen's ethos, our mantra, or our philosophy, just generally speaking, when it comes to portfolio management, we tend to focus more on bottom-up security selection and credit fundamentals. So, throughout these periods of volatility, depending upon what's driving that volatility, we're focused on issuers that, have strong fundamentals, strong free cash flow growth, as well as positive outlook on a go-forward basis. So that's really what we focused on through this volatile period.
Yeah. Tell me about the closed-end funds. So you're working with those. Give me a brief description of what they are and how they fit into a portfolio.
Yeah, so we are the third largest manager of closed-end funds globally. Closed-end funds are basically a fund wrapper in which we do not issue or redeem shares as investors purchase those securities. As a result, the share price in which investors buy those funds at can trade at above or below what the underlying assets are within that portfolio, a premium or a discount to the NAV of that portfolio.
Okay, and how do they fit? I mean, do people like to use them as protection, or how do they fit into a portfolio, would you say?
So on the fixed income side, you tend to find a lot of coupon clippers. So investors that are living on a fixed income, they like to clip a coupon. And I think that's for a number of different reasons. One is a closed-end fund vehicle, generally speaking, allows the manager to add things such as leverage, to buy maybe a little bit less liquid securities than you might find in an ETF or in a traditional mutual fund. So that bodes well for investors that are looking for a little bit extra yield. I think when we look at just broad fixed income closed-end funds at the moment, of which we manage a good number of which we just took over a municipal national income strategy, ticker VFL. When we look at the marketplace right now, you're looking at fixed income closed-end funds at discounts to NAV north of 10%, at extremely attractive yields. And then in terms of that leverage cost, as we get to sort of peak Fed funds levels, that's expected to come down. So you should start to see those dividend yields to investors creep up.
Okay.
So extremely attractive place to be investing into coin.
So I just want to get your take on the economy. You mentioned you expect maybe a slowdown coming. I mean, how do you see things playing out? We've been through so much. We've been resilient. I mean, we just heard all these bank earnings, and almost all the CEOs said how resilient things were, and the consumers are resilient. And I mean, where do you think we're headed? What should we watch out for?
You know, we continue to see cracks in certain areas of the economy, right? There's no doubt about it that things are slowing. That being said, I think despite the criticism that the Federal Reserve has faced, they've had a tough task. And it's starting to look like maybe they have threaded the needle.
It does, doesn't it? Yeah.
Right?
The soft landing.
Exactly, exactly.
Yeah.
So if you're an economist, of which I'm not, you certainly, I think, have increased those expectations of a potential soft landing, if you will. That's not our base case at Aberdeen, but it's certainly over the last month or two, as we've seen most recent economic prints, as we've seen inflation obviously starting to come down and more in line with where we'd like to see things going. Certainly a soft landing has increased in terms of probability.
Yeah. John, thank you so much for your insight.
Thank you, Jane. Pleasure.